I'm fine. If I need to sit up.
So I can't wait for like 15 hours.
Yeah, good morning.
I can't wait. It's frightening, but I can't.
So welcome everyone. For those joining us online, thank you for logging in. We have a couple folks here in the office as well, so welcome. Today's presentation is brought to you by Lisa Lowry. She is going to discuss QuickBooks. Tax season is approaching quickly, to an end actually. So she'll go over that. We do have a little raffle at the end, so make sure you stick around. And we have our member orientation. So if you want to learn more about the chamber, you're more than welcome to stick around after our presentation. So I'll go ahead and let Lisa take it away. Thank you.
Good morning, everyone. Again, my name is Lisa Lowry, and I'm with Good Tax LLC. Good Tax is continuing the legacy of Mr. Calvin Good, who was in the city of Phoenix. He founded Calvin Good and Associates back in 1955, and he wanted to help individuals get their taxes done and accounting. Good Tax was formed in 2014 under his son, Gerald Good. So I've worked with Gerald for at least 4 or 5 years now. We specialize in taxes and accounting. And for the accounting, we're more geared towards the smaller businesses who a lot of times don't have the resources to go to the CPAs to get their taxes and accounting done. So we kind of cater to those companies to kind of help them through. I have been doing taxes and accounting over 20 years. So I bring, quite a bit of experience to the table to help with the taxes, accounting, and personal taxes as well. So my first question is, why should small businesses keep financial records? If I can get one person to kind of give me.
They're in trouble.
You're absolutely right, because when you establish a business, what happens is you have to be able to know what your finances are going to be. You need to know on a monthly basis, what's the revenue that's coming in, what expenses are going out. So that's definitely important. It's also important to monitor the progress of your business on a regular basis. I always ask small businesses, I say, so if you're going to make a big change in your business, it's very important to know what your finances are. And that way, when you make the decision, you're looking at it on numbers. What do the numbers say? Is it advantageous to make that change based on what your finances are look like? It's important to keep good records to monitor the progress of the business. You want to be able to see what is the trend, what services and products are more important to your clients. I mean, if you want to be able to have the statistics to be able to make those decisions. Your records can show whether your business is improving, like I said, which items, either service or products that you need to, maybe increase or change, or, it gives you that information. Good records can likely increase the likelihood of your business to succeed. I mean, that's real important when we start a business. It is a good practice to have monthly financials and to be able to see, what are the numbers really saying to you. Making some decisions for your business requires having the up-to-date financials. And you also need financial statements. I mean, we need financial statements for many different reasons. When you establish credit, a lot of times they want to know what your finances look like. What is the business making? Is it making money? Is it losing money? What is the business doing? A lot of times there's grants. Grants are notorious to know, they want to know maybe a couple of years worth of financials to be able to see. I know there's been quite a few federal or regular grants for during the pandemic, but they wanted to know, was there a trend in 19? Was your income lower in 20 than in 19? And if so, that there were funding available to help businesses through that. So that's why financials are they're really the guts of the business, to to be able to have those and have them up to date as well. Um, what key components make up the financial statement? Does anybody know the key components?
Assets,
That's one.
profits,
Yep, that's another. Mhm.
income,
Income, yes, exactly. So there are the financial statements have two main components, and you all listed those components. So there's the profit and loss statement, which basically what that does, it looks at the income coming in, and it looks at any expenses that are going out that are relating to the business. And then you mentioned the net income. That's the difference between your profit and your expenditures. It could be net income, meaning that you acquired more income than you did expenses, or if it's a net loss, it just means that your expenditures were higher than your income. I'll talk about that. So basically, so that was the income statement. Then there's the balance sheet. So the balance sheet basically looks at any of your assets that she mentioned, and assets are your cash that you have in the bank. It's any receivables that your clients will owe to you or to the business. And any money that is owed to you would be part of your assets. Liabilities are any creditors that you owe. Like if you have a credit card, the credit card is a liability on your balance sheet because the business owes somebody some money. And then there's the equity piece of it. That equity is basically what you've invested in the business and any money that you've taken out of the business. So all of those balance together to have a balanced financial statement. Let's talk about the components of the financial statement as where it relates to the income statement. So we look at income, and that's basically any type of service or product that you basically use for your business that is going to generate the income into the business. It's very important to be able to keep track of your source documents when your income is coming in. And what I mean by that is basically, how do you receive your income? Do you receive it? Do you send out invoices and then the invoices are paid? Or do you basically, usually invoicing is the main one, but there are a couple of others like cash receipts, bank deposit slips. If you have customers that pay cash, you're going to have the bank deposit slips to be as your source document. Or you might do a receipt book and give that to your clients. So, or a charge card. If your clients pay you on Square, then those are your source documents that are needed in order to basically support what you're saying on your financial statement. So it's important to be able to keep that documentation as well. The business expenditures are any expense that you're going to need to support your business. Any supplies that you need to purchase, any equipment, even though equipment is a little different depending on the amount of the equipment, a lot of times we have to depreciate if it's a high value equipment. We'd have to depreciate it. So you're not getting the full value of the depreciation in the same year that you purchase it. It's normally expensed over a couple of number of years. Like, let's just say for an automobile, if you use that for your business, it's depreciated over 5 years. So some of the supporting documents for your expenditures would be if you write a check, the canceled check, if you pay by credit card, the credit card receipt, so that kind of thing. You want to be able to have those supporting documents to be able to support what your financial statement is basically saying. So pretty much that's the balance. The income statement is the income and the expenses. And then the assets, though the balance sheet, that basically comes into play when you're buying equipment or anything that's going to be an asset. Of course, you're always going to have your checking account or your savings account for the business part of the balance sheet. So what normally happens is when you have your financial statement at the end of the year, it'll basically, we use the profit and loss statement mainly for the Schedule C customers. So that's just one person in the business. The Schedule C doesn't allow for any of the balance sheet items. It's just the income and expenses. So we use that to prepare the tax return. So we use the income statement to be able to take care of preparing the Schedule C. So I'm not sure if most of the businesses are Schedule C or partnerships. Is there a mix, do you know?
What dictates if I file a Schedule C versus?
So if you're a sole proprietor, if you're the only person in the business, then it's going to be even if it's an LLC, it's still considered a Schedule C.
I would say, I'm not gonna help to answer your question. And Rose, I can help me here. I would say maybe 50-50. 50% of our businesses are sole proprietors, individual entrepreneurs, and the rest have 2+ employees.
Okay. So then the one with 2 or more owners of the business, it would be either a partnership or an S Corp or a normal corporation. And what distinguishes between those is normally, so a partnership is 2 or more people, or 2 people at least, where it's a separate schedule that we do, which is called a 1065 form, where that it's a separate tax return totally. And that actually, we do the business tax return, which includes the assets and the income statement. And at that level, at the business level, they're not taxed at that level. What happens is we do the income statement, we figure out if it's a net income or a net loss. And if it's, let's just say for an example, it's a net income, they have more income than their expenses, that income we put on what we call a K-1, which are the individual owners of the business, and they get the K-1 so that they can file it on their personal return. So that's how that's done with partnerships and S Corps. They're not taxed at the business level, they're taxed at the personal level. And whatever share they own in the business is the share of the income or loss that they have to report. So I was saying all of that to say that what I've done with a lot of small businesses is to set them up on QuickBooks, which really tracks a lot of information, and we're able to do a lot of the accounting functions within QuickBooks. it's all online, which makes it good. So as long as you have an internet connection, you have a single login and you can log into the account. And what happens in QuickBooks is that we link the business bank account. So that's why it's imperative that small businesses have a separate bank account so that those transactions are just slated for the business and we can track it that way. And it's real easy. You basically look at the transactions as they come in and you code them according to what we do is develop a chart of accounts that's basically the accounting of your business. You know, what income categories do you have? What expense categories do you have? We look at that and kind of tailor it to your particular business. And we go through that I usually like to do it on a weekly basis for clients so that they can get a feel of, you know, what those categories are and how it looks in the QuickBooks system. QuickBooks it does a lot. You can send invoices through QuickBooks. There's actually an app on your phone that you can download, so you can create invoices right on your phone, and it's part of the whole theme of your QuickBooks program. You can scan in receipts. What I recommend clients is to scan in your receipts right from your phone. That way, let's just say I'm doing the day-to-day or the weekly categorization of your expenses and income. I can see what the purchase is. And I don't have to call you and say, hey, what was this that you purchased from, let's say, Office Depot? You know, was it equipment? Was it something like a printer? It'll tell me, and you can attach it to the expense that's right in QuickBooks. So it makes it real user-friendly. What else? It does so much. It kind of encompasses all of your accounting in one area. So I talked about, you can manage your customers. You can include all your customers. You capture all their information, because usually during certain times of during the end of the year, we have to do 1099s for certain, some of our customers. So that helps because you'll put their address, their contact information, their employer identification number or social, whichever one they use, so that at the end of the year, we can report that in a timely fashion. Because though any 1099s are due by the end of January, they have to go out. Excuse me, I'm getting a little dry mouth. QuickBooks, you can pay bills. It has payroll, so whenever you get staff, it's real user-friendly in QuickBooks. You put in the employees, you can track their time. It automatically will do your payroll taxes for you. It'll even file the reports for you. So you just basically have to put in the basic information and it'll do that. Reports. I mean, it gives you a lot of reports. It'll give you your financial statements. So you don't have to, you just click a button, tell it what time period you want, and it'll pull it in. So it's real user friendly. It's just getting comfortable with the functionality of QuickBooks. I guess I could show them just a little of what it looks like.
Well, she's pulling that up. I don't know if anybody has any questions.
You sure can. Yes.
So I mean, you asked what percentage of our small businesses are entrepreneurs, single entrepreneurs. Most of them, as we said, are single entrepreneurs. So budgets aren't huge, right, for marketing or accounting services. So what would you say to them about, at what point do I stop doing my own QuickBooks and engage somebody like you? Should I be at what point in terms of revenue should I be doing that? I played with QuickBooks. My dad's a small business owner, has been for most of his career. So as a family business, I dabbled in QuickBooks for them a little bit, and it can be confusing. Even at a basic level,
Mhm.
and certainly you don't want to mess anything up, at least me, right?
Right.
I never wanted to mess anything up, but at what point, it is user friendly though.
It is user friendly. That the way I would answer that question, it depends on the individual. I'm not going to say it's based on a size of a business because you have to have the foundation there first in QuickBooks. And most users aren't going to know what that foundation is, like the chart of accounts, getting that set up. So it's best to bring us in the beginning. We can set it up. And then if you feel comfortable after the training, most clients feel comfortable and they'll go ahead and do it. But I have quite a few clients who say, I don't want to have anything to do with it. I just want you to maintain it and just send me the reports. So it varies.
Sure.
So it just depends on the comfort level.
And I suspect your services depend on the complexity of a business's records or accounts, and I'm sure if anybody's interested in them, they can reach out to you to find out what your services cost.
Yeah.
But does it vary depending on the complexity of my business or my books, or it's the same?
It doesn't, the only thing that changes, it depends on how many hours
Okay.
it'll take. Normal setup normally takes me with the client, I could do it in an hour to get them set up. So it just depends on what you want out of QuickBooks. So it's best to think about, what do you want to accomplish?
Right.
Is how much time you spend in it. Yeah. Okay.
I don't see any online. Let me see if I could just hook up my computer real quick so we could see here.
I have a question. Do you have a bundle package for QuickBooks or what is it? Do you have like a workshop shop or anything?
Oh, you mean for
Yes.
So basically, QuickBooks has different functionalities depending on what you need. If you don't need payroll, then you can probably start at the beginning. Bundle, there's like 4 different tiers. Most small businesses, I recommend the lowest tier unless they want to do payroll. And then at that time, we'll bump them up to the next tier. What is the lowest? What is that cover? So that. Yeah. I think, well, it does invoices, it does your, you can do estimates, you can do, you can send invoices, you can receive payment from the invoices. It keeps all of your expenses. I think what it doesn't have is payroll.
No payroll on this product.
Yeah.
And it's decent.
What is the pricing monthly or how does that work?
I think you can do either, right? You can pay monthly, or you can do an annual.
Start off at like half off for
Yeah,
the first
yeah.
3 months.
First
After
year.
that, 3 or 6 months is $27. That's the lowest tier.
And I set it up where the client pays that. Okay. Yeah. As much as they can take care of that. I mean, I use it for our taxes. We were using Sage, which was a little more work because the transactions, I had to enter all the transactions. It wasn't interactive. So we couldn't attach the bank account so that it would pull in. I think that's the best way because, time is of essence. You want to spend more time in your business than you do worrying about your finances. So yeah, that gives you that.
And then someone said that the questions that are being asked are not heard online, so if you
Oh.
could just speak up a little bit. That'll be great.
Okay, thank you for that.
While we hook up the computer for our in-person attendees, maybe if you want to kind of show our virtual attendees, they could see my screen right now.
Oh, they can see it. Okay. So this is, let's just start at the, So this is the dashboard where it basically kind of recaps what I talked about, like adding your products and services, managing your customers, so you'll be able to list all your customers in your customer database. And from there, you can create invoices, create estimates, excuse me, send invoices, and then actually receive payment. That would be your money coming in. And then going out, you can pay the bills. So I'm gonna take you to the banking piece, because what this does is this is where we connect your bank account. And I don't have anything set up in here, so that's why it's bringing me to this screen. This is just a platform so you all can see it. So we would connect the bank. Let me just click on it. So basically, this is where it would take us to look at your particular bank. So we would actually log into your account to be able to have the transactions to continually feed into your account. I don't want to get too far because you guys can't see it.
Yeah, why don't we maybe give it a minute, so you're not too far ahead. So you talked about just maybe basics. Elizabeth said it's tax due, right? I know
Yes, it is.
individual taxes have to be submitted, well, typically the 15th. I think it's the 18th
It's
now.
the 18th
Okay.
this year. Mhm.
The 18th. How do your business taxes differ from that?
So if you're a partnership or an S corp or a normal corp, taxes were due March 15th.
Okay,
So
so if
that
you didn't get it done,
hopefully you filed an extension so
Right.
you can get it done. And so Schedule C businesses are due April the 18th.
Okay.
Yeah. And but they can do an extension, but I like to tell people it's only an extension to file the return. It's not an extension if you normally owe.
so I have a question, because I know some small business people who this has happened to, right?
Okay.
So they manage their own business. Maybe they didn't know some of this stuff, so I've gotten in arrears, or I don't think I have to file because I haven't started to make money yet.
Mhm.
How do I fix that? Can I fix that even if it's been a couple of years? What should a business do if they're in that position as we try and get this?
They need to go ahead and file.
Okay,
Because I mean, it's gonna be advantageous for them to file, because I talked about grants.
Yeah.
If they're wanting to apply for grant money and
current.
right, they have
Yeah.
to be current, and they're gonna want their financials for those years. You know, let's just say, for instance, they're applying for money because of the pandemic.
Right.
And they need 19 and 20 to be able to make that comparison.
Right.
So we would go ahead and do the financials and do their amended, do a return. If they file and get to prove the business, we can do an amended return and prove it.
Okay. And you can help anybody with all that information.
I have a question. I have a business that is starting years ago. And the person who do the personal business, no, personal taxes, say you can start in a file, but you put it together with your personal taxes. Okay. And say you don't make it a certain quantity, more than annually as the business. It's an advantage to you, they separate and do only your business or in your person. That is right?
So you're saying it's not advantageous to do it
No,
separate?
Yeah. The
It is.
person that do it, our taxes says, would you not make a certain amount of money as an income from your business? And it's not an advantage to you, they separate it. And we continue to do it together. But my question is, if you want to apply for a loan or a grant, and you have to present your taxes, this means you're going to have to present the whole income. The income, personal income, it can be my husband's income, and the business is gonna be there. It's gonna be that, no good for eventually apply for.
My recommendation,
Mhm.
I think businesses should be separate because you're basically commingling it with your personal money. And it's harder, it can be done, but it just takes more time to pull out your personal to figure out what's the business. It just takes longer. I always recommend businesses to get a separate bank account just for the business.
Mhm.
It just makes life a lot
No,
easier.
I have a completely separate
Mhm.
account, bank account,
Mhm.
credit card account, everything for the business.
Okay.
It's just when we went to do the taxes and we say we open a business, we started, and he said the first year, he said, well, you're even 3 months into the year, you're not really making nothing this year. You just don't put it in this year. But next year, we're gonna put a you, everything the taxes that you need to pay for your business, we're gonna put it together.
With your
with a
personal.
person.
Yeah, and if you're, so are you a sole proprietor?
Yes.
Yeah, so that's normal. That's normal to file it on your personal return.
My
Yes.
question then is, if I wanna apply for a loan, and I wanna apply for a grant,
Mhm.
I'm gonna have to present my taxes all together.
Normally, they're just gonna want the Schedule C,
Okay,
which is strictly just your business. It has your business income and your business expenses.
okay,
Yeah.
that was my question.
Or you
Sorry.
give them your financials,
Okay,
which are totally separate.
okay, yes.
Mhm.
Oh, okay, this thing I can continue to do it the way I'm doing now.
I thought you meant you didn't have a separate bank account.
Oh, no, no,
Yes.
I-
No, you're doing the right thing.
Okay.
Yes.
So piggyback on that, so if you have a business that you haven't really getting any income yet, then you pay for your LLC and all that, and you do have a bank account, do you file or do you not file? Like if you started this year, do you file next year?
What's the threshold? Let's see if they make an excess of
Exactly.
what before
There-
you file.
Not for, and well, so the IRS guideline says there are startup costs that, and the maximum is $5,000 for startup costs.
Okay.
So you can file that even though the business hasn't made money because you still have established expenses to start the business.
So that's a loss.
So it's a loss the first year.
But like Angie said, if you're a real estate agent, right?
Mhm,
Didn't really cost me, maybe I paid for a test and
mhm,
haven't started making any money and I'm making, I don't know, I'm gonna make something, less than $5,000, less than $1,000. Maybe I'm starting up.
mhm.
Are you required to file?
If you made over $600,
You require.
you're required to file.
Okay.
Because normally, like, let's say with real estate, if you make over $600, they're gonna send you a 1099 NEC. And anything over $600, you have to
You
file,
have to file.
because that's income.
That's what triggers. Okay.
Mhm,
But if you have startup costs, your point.
Yeah.
I can register a loss.
Exactly.
Okay.
And where does register a lot? You just have to pay back or what?
No, so for sole proprietor, what happens is if you have, so the question is, what happens if you have a loss? So if you have a loss, you register it on the Schedule C, you itemize whatever those expenses were. That loss transfers over to your 1040, which if you had salaries, it reduces your taxable income.
Reduces.
It reduces. Yes.
Good or bad?
It's good. It's good.
Okay, okay. Well, so that's.
Exactly.
But if you file like 3 or 4 years at a loss, there might come in more.
Well, I mean, you would think that, but that's why I went through the source documents. If you have proof that, right, that it's all legitimate, it's the IRS cringes when you don't have backup to support what you're saying on your
3
taxes.
years is common, it's acceptable to be into the laws because it takes the 3 or 5 years to establish a business.
At least 5,
You know,
at least 5
but
years.
it has to make
It's
sense.
not a hobby.
Yeah, no, it happened, they say you have to have approved all the expenses.
Mhm. Mhm. Exactly.
Probably have more specific questions later, but a nonprofit. And there's a 990 form.
So 990.
Is that was with the state in October, November of 2020.
Okay.
And then 2021, I was just a register with the state.
Okay.
And then last year I applied for the IRS 501c3, which I just got.
Oh, good.
And,
Awesome. Okay.
Now, and I haven't filed anything, everything like donations and expenses,
Mhm.
no income for anyone.
Okay.
So now I have to file, but I looked up and said, you must, like, someone said May 15th, and the last right now was 4 months from the date, the calendar date of.
Right. When your calendar year, when your business calendar ends.
Yeah,
So when does yours end?
should be December.
December.
Mhm.
So it's April 15th. It's 4 months. It's actually May, I think.
So,
Yeah, because I have some 990 clients as well, and we're not there yet. Thank goodness. Yeah, I think it's April. I think it's May, because I have a schedule that I keep because I can't remember all the dates.
Right.
Yeah. So, but on the 990, you have some options because if you make under $50,000, you can do, there's 3 choices. You can do an in card, which is a note card, which just says we operated last year, but you don't have to report any income. Or you can do the easy form, which you do have to list your income and, it gets a little involved, or just the regular 990. So just starting out, your choices would be either the in card or the easy form, the 990 easy.
Basically, we had about 3,000 in donations and sponsorships, and the rest is self-funded.
Self-funded.
Mhm.
Okay. So the downsides to doing the in card, most grant, people that give out grants go to a certain database to see if you filed a 990. So if you do the in card, they're not going to be able to see anything but the card. So it might be better to just go ahead and do the easy form
Mhm.
if you're wanting to apply for grants.
That would be the next step.
Yeah, awesome, awesome.
Sorry, we were unable to plug in the projector for our in-person attendees.
How are you doing that in person? Are we having a live?
Yeah, we're all here. So is there anything else that you want to show, or do you want to just continue on?
Yeah, I think I'm good unless there are more questions, because usually I find there's more questions, and I'd like to be able to answer questions.
So when I get entrepreneurs, normally I recommend to them to do LLC because of when I've been told that if you file as a sole proprietor, something is to happen to the business, they can go after your personal assets.
Mhm.
And when if it is a entrepreneur and it files as, and it registers as an LLC, what are you best practices or recommendations for them?
On which way to file.
Yes.
So LLC is at the state level. It'll protect the business. I think a lot of people don't realize for tax purposes, an LLC doesn't mean anything on the tax side. So you still have to decide which way to do the tax piece of it. If based on cost, if the Schedule C is the cost effective way to do it. If you do like an S corp, an LLC can do an S corp, but you have so many days to fill out the paperwork to do an S corp. That way, but the thing about it, it's a separate entity, which is filed. The 1120S is the form that we fill out for an S corp. but they have to establish the S corp prior to that. And it's just another form that we send to the IRS to establish that so that they can file the S corp, and that will, keep them. What's the word I want to use? It'll basically have better protection for them, is what I wanted to say. Yeah.
And what is a sole proprietor? What would you recommend to be like the best practices to set up? To have their own bank account for the business, and then to keep records on just the transactions.
Yeah, some type of financial software, I think, is a great advantage.
Are there certain software that you all recommend for your clients?
I've done Sage and QuickBooks. I kind of favor QuickBooks because it's an easy setup. Sage has it, but it's a little more cumbersome to handle. And I think clients need something that they can understand, and it's easy and doesn't take a lot of time. Yeah, so that's what I recommend to my clients.
It sounds like you guys already use QuickBooks.
Yeah,
Yeah.
which is good.
But basically. What questions did you guys have at the outset, or what questions do you have now that you're kind of into QuickBooks? Do you guys engage someone? Like Lisa?
Which I would like to talk to you about that, because
Yeah.
I do have a treasurer
Mhm.
who will handle that part and kind of keeps an eye on things. But I will need someone who are more experienced.
Yeah, because on the 990, your chart of accounts has to be set up to distinguish between programs. What's the cost of the expenses of your programs versus non-program? Meaning non-program would be any administrative, like your rent, that isn't directly associated with a program. So, yeah.
So that will be also the pay in case the person is getting paid for that nonprofit, it will be on their non-program.
It will depend on if that person is directly functioning with the program or non-program. Yeah. Because you'll have some employees that are strictly doing program, and then some that are doing administrative.
Question about vehicle uses. I heard some small businesses ask this at another. That was gonna be mine. Yeah, at what point, so I suspect you probably use your personal vehicles, right? At what point does someone say you write off your mileage, or you don't, or what are your recommendations around vehicle and writing off mileage and that whatnot, or my car payment for that matter?
Can't do car payment.
Okay.
Yeah.
What's the?
So vehicle is any maintenance, any repairs, that kind of thing for car.
Okay.
I tell clients you're gonna get more bang for your money if you do mileage.
Okay.
Because you're actually getting, I think it's 58 cents. It is 58. Okay, so you get more bang for your buck if you do mileage. So with our clients, we look at what the expenses are, and 9 times out of 10, the mileage is more than the expense, and we can only use one. You can't use both.
And can you share the rule of thumb again? Is it to and from my office? Is it, most people are officing from home right now?
To and from the client.
Okay.
To and from the client.
Going to vehicles, at what point, once you start cash flowing and you're making money, and I decide I want to buy a car with my business, right? At that point, is that when this is a true business vehicle and I can write off all expenses associated with it, or no?
I mean, it's a business vehicle if you're using it for your business.
Okay.
So a lot of
whether
times,
I buy personal funds or with business funds.
yeah,
Okay.
especially for the Schedule C in business owners. So what I typically do, let's just say you have a vehicle that you've been using, but you just started using it as part of your business. We can depreciate the vehicle. But that's when you start making more money and you're trying to bring down your net income. At that point, we can do the depreciation of your vehicle. Because if you depreciate the vehicle, the net income, you can have a net loss, including the depreciation. So that's why if there's, money that we need to reduce, then we use the depreciation.
And in terms of mileage logs. Yeah.
Well,
Google Maps.
I use Stride, which you just click, I'm leaving, going to a client. When you're done, you click it again and it records the mileage. So, yeah.
Are you doing some insurance, for mileage?
So I use like the QuickBooks Self-Employed.
Yeah.
It just automatically does it. The problem is I don't go in and say, this was this, and so then I sit there and cry over a month.
So you just have to look at your balance.
Right.
But I mean, obviously it's hard to be 100% accurate with all of that. To what degree when you are, are they scrutinizing like how that mileage is being tracked, or percentages business to personal? Is there any rule of thumb, or is it just based on this detailed log?
Well, you need to have it, if you use it for personal, you need to differentiate
Right.
which is business and which is personal. And you need to, log it and indicate that. Because if you're ever audited, you have to prove
Right.
to the IRS.
It's not-
Yes,
Right.
yes. So,
We just do that.
The only way that I know to do it, because this thing, the logging in an app, and every time you go to an appointment or something, half the time I forget. And for that reason, I started to put in my calendar, where I put in my agenda,
mhm,
every appointment. There is the address there, and I always try to go and see before I go, the day before, what
mhm,
is that, how many miles,
mhm.
and I immediately put it a little round thing with the miles that is gonna take me to court.
That's a great idea.
And if I am disciplined enough, at least one time a month or every 2 months when I have a time, I look at my calendar and all my appointments and I say how many miles I did this month.
Mhm,
Just for have an idea for at the end of the year, not have to work so hard for putting together the miles for the taxes.
mhm.
I think it's a little too much work to do it that way, but I still don't know any other way to do it, faster or more practical.
Unless you use the app. There's an app on your phone.
But you have to remember.
Yeah, you do.
But it has all the addresses, so I can say, oh, that's this assisted living place, that was my client's house, that was, that was my kid's baseball game. So, I mean, it's not, it's just tedious. Very
Yeah,
It is.
yes, but no.
It is.
And maybe it can be come handy if you have to prove it, because I have my list with every appointment, when happened, at what time, and I can show them,
Right.
but it's time consuming.
Yeah, it is, but it'll be worth it to keep a log of your mileage. Yeah.
You have a log and you get older, that is my log is like, okay.
Mhm.
If you don't have one, then they'll start asking for it. But it's still there a 3-month average speaking for
For
mileage.
mileage?
Yeah. So that's what I was, and I looked it up and it was what, 6 years ago. If you feel like your average of 3 months, and then you can use that for. But
I don't use it. I mean,
I was thinking of heavy month when you feel kind of tired, you use that.
yeah.
Yeah, I'm sorry.
I just don't know how that will pan out if you're audited.
Well, you see a lot, you do 3 months and then. So,
Yeah, but you'll have to, yeah. I mean, how do they know what your heavy months?
right.
I rather clients keep it with what you do. That way you don't have to do any extra if you're audited.
Right.
Yeah. I know it's probably easier that way, but yeah,
And
Unless-
obviously, it protects you.
it does.
Yeah.
It does. Yes. I don't know if there's any questions online. I can't tell.
That's important to know away of all
No red flag.
personal experience, I have to do the mileage and I have to pay about like triple, yeah. So it's really important, the mileage, and then they go back all the years.
Yep.
Audit you like crazy.
What would trigger an audit like that? Yeah. What's this? You know, like what's a huge red flag, like,
I try with my clients, if you have the receipts, it's not gonna be a big deal. But I think a lot of times what triggers, if there's a lot of inconsistencies, they kind of look at from year to year, and if they see big changes, yeah.
I don't know, since we run such a digital, but I don't, sometimes I mean, I have a tendency to go back to, your bank account or.
Yeah.
Those are all good.
Yeah, they're
You know,
good.
That counts too, right? If I can refer back to my bank account and take a snapshot or something.
And you just load it in,
Right,
because I know QuickBooks, you can do that.
you can do that, or take a picture of your receipt.
Mhm.
I know it's tedious, but
It is, but it helps in the long run.
sure.
You mentioned earlier about depreciation. Can you elaborate a little bit more what you mean by that on the car?
So it's any asset that you buy. So normally expenditures, you buy a stapler and you expense it. So there are more high cost items that we don't expense in the same year that you purchased it, like a copy machine, assets, a car, anything that will hold its value. It's depreciated over years instead of in the same year that you purchase it.
If you work from home, how much of your house you can declare as a public business?
Whatever room you use. So the calculation on the tax return basically says what's the total square foot of your house versus the square feet of the room that you use. And it gives us a percentage based on that. We divided those two numbers to get the percentage that you use for the home office. And it takes either your rent, if you're paying rent, or mortgage, and your taxes. It'll take whatever that number is and multiply it by that number
Okay.
to get the dollar value.
Okay. And that's the same if no one is office man. And let's say you have a storage room where you have your produce and everything that has to do with your business.
You have to incorporate that in the space that you use for business.
What about you doing?
So to be able to do the home office, you can deduct your rent or mortgage interest, your real estate taxes, utilities, which are your electric, gas, and water. Any repair. Most people, you can do it either way. You can do it as part of the home office, or you can do it as part. Sometimes the business will pay for the internet. So you have to pick one or the other.
What, is there a benefit to either having a business or your personal tax?
I find that your business let's just say my business, when I work from home, that's mainly what I use the internet for, is for the business. Very little personal. So I just have the business pay for the internet. Yeah.
What about all of us use these, right? And I mean, like I have, your business, I get personal calls and I get business calls. Do you recommend businesses
A
a
percentage.
separate phone or do a percentage? Because I think it's really hard.
It is.
Talk about mileage. I mean, it's hard to separate phone calls. A lot of companies don't even do that anymore.
Yeah, and they don't. But if you do, you could do a percentage, because you do both personal and business. So just
Right.
kind of say, oh, well, let's say 65% is business calls. So you would charge the business 65% of that.
And an estimate suffices for that, I guess. Yeah.
I mean, you take the cost of your bill though, per month, because it's usually the same, isn't it?
Yeah.
Yeah. Yeah, so you just multiply it times 12 and divide it by the percentage. Mhm. Good, great question.
And then if you take clients to lunch, do you count that as well on the itemized for the business? Or no?
You can, but it has to be it has to be business related.
Yeah,
So you have to document, what was the meeting about? Was there a client there? So you got to document that, because if you're audited, they're going to ask you.
And I know that they increased that to 100%. Is that changing in the next tax years or have you heard?
I haven't heard. I haven't heard. We have a question online.
She is asking, I rent a room where I live, but I have sectioned off the room to allow for home office space. Can I still write off the office space portion for tax purposes? If so, how?
I think you can. I mean, I've never had this come up, but when you think about it, you have your room that has a square feet, and then whatever part of the room you use for your office, you just divide that to get the percentage, and then you can include whatever you pay for rent, and if you pay utilities, you can include that. So you can use the same calculation as if it was a separate room. So I think you can, yeah, because you're still,
Doesn't say anything about walls, right?
it just says square foot.
I mean, there's small studios in New York City. probably is
Exactly.
smaller than that.
Exactly. Yes.
Now, on the lunch thing, so Angie takes the client out to lunch, I sit down. But what if Angie and I go to lunch, she pays for hers and I pay for mine? Is that still, we discuss business?
Yeah, as long as you discuss business. Yeah. Yeah. And just document that.
Now, people traveling again, a little bit, right?
Mhm.
You're in California for a meeting. I take my family with me. Do percentage too, or can I call that a business even though I take them, or talk about that a little bit? Because I know some
Well-
people fudge some of that stuff, so. And
Yeah, so I always use the rule of thumb. Document what the business was. If you didn't take your family, you still had to pay the hotel room regardless. And it's not based on per person. Travel, I wouldn't include your family's travel if you're paying airfare.
Sure, okay,
I would just do what you needed to get there.
but if I'm driving, if it's the same hotel room, that's all.
Yeah, I think that's fine. Yeah, I do that for clients because even if it was just you driving and not the kids, it's no extra bringing the kids
Exactly.
and the family. Yeah.
But you have to add it to the business only your meals, you can buy the meals. Meals at the time.
It's just whatever for that
Mhm.
individual.
Now, do you do taxes yourself? Okay, I must have missed that.
Yeah, I do. So I'm working at the tax office full-time now. I don't have a separate job. So I head up the accounting piece for our clients, and I also have tax clients as well.
Are you more inexpensive than HMR?
So it's tax time right now. Do you guys backlog? Do you have
That's an understatement.
bandwidth? Should
Yeah.
someone get in touch with, you need 2 weeks, like,
No, I mean, if it's something urgent and you need, just call us. We have to make time for our clients. And yeah, we know this week we're working till Monday, including Sunday. So it's just a given. I worked last Sunday.
You have time to be here.
Well, yeah. Well, see, our office doesn't open until 1. Yeah. So
1 till 1.
1 to 7. No, 1 to 7. Yeah.
So you're booked out till Monday.
Well, so this last week during tax season, we don't take appointments. It's like first come, first serve. So if you still need your taxes done, we tell our clients, you just got to get here and we'll work you through it. We'll work through it.
Bring the shoebox and pray.
No, that's why we're gonna get people on QuickBooks. I don't like shoebox. I had a client bring me a box full of receipts. And I was like, we're gonna get you on QuickBooks. Because I don't think you wanna pay our cost per hour to go through this box.
Right. Do you charge a flat cost per hour? Let's say I have you do my taxes and I'm like, and then I'm like, I want to be better set up for next year. Can you show me how to?
Yeah, so taxes, we have a fee schedule for our taxes, which it depends on the type of return and the complexity of the return. And then we have an hourly rate for our accounting clients. Yes.
I guess my question is how much?
I don't know. Is it on?
Is it a case by case basis? Everyone has your business card, they can contact
They
you?
can,
Okay.
yeah, let's do that,
Okay.
yeah. I've enjoyed it. Great question.
Thank you.
Awesome.
Thank you, Lisa.
Free tax advice.
Yeah, but I have cards here, you know, if you guys need them.
So the deadline is on Monday, and if you haven't filed yet, let's say, you file, I guess my question is, you have to actually have sent out the paperwork in order for not to be behind, you know what I mean, to pass that deadline. So let's say that you, go in on one Thursday, you file, but then you still need paperwork. Then you're not considered late, or how does that work?
So we can file up until the 18th by midnight,
By midnight?
by midnight. Yeah.
They gotta be out.
No, we do them electronically.
Oh.
Yeah, no, we do them electronically. So usually by Monday, the IRS is so backed up, we might not get an acceptance that same day, which is fine. I mean, I haven't had clients complain about that. As long as we've sent it by that amount, you know, it's up to the IRS to accept or deny it. And they still give us a couple of days, even if it's rejected, we can clean up whatever the issue was and then go ahead and resend it.
I have a question for you. I think, coming out of COVID, I know there was some leniency the last couple of years from the IRS and the presidential administration around taxes, and they bumped the deadline a few times. What are you seeing in terms of trends with the IRS? Because there are still some people, I think, out there, and legitimately lots of businesses that are still struggling and coming out of COVID or are still being impacted. I mean, is the IRS back to, being challenging? No, I don't want to say challenging, they're doing their job. But is there any additional flexibility for folks that are still having some difficulties?
What I've seen in this tax season, the IRS is still backed up a lot.
Probably very understaffed.
They are. They are.
Oh.
Not right now, but they're doing this big mass hiring, and I'm sure that's what they're gonna ramp up for, to be able to, because they've been so lenient the last couple of years. They're not lenient when it comes to paying the bill with them. That's kind of cut and dry.
If I owe you, we'll be lenient. I mean, they
Yeah,
have to pay us.
right, if they pay us, then they're,
They'll
but
take their time.
exactly. So yeah, they're still backed up, and they're still taking a lot longer to release the refunds. It's taking a little longer than I've seen it. So yeah, but tell your businesses, come on, let's get them going. Yeah, get them back on track.
Well, thank you so much for today's presentation. Appreciate it. So we have a little raffle for those of you who stuck around online. Our winner, we have Diamondbacks tickets, so we are raffling 2 tickets online and 2 in person. So I'll grab your business card. All right, so our online winner, we did a little drawing already, is Laurie Mendoza. So we'll send you your tickets electronically.
Boom.
And Genesis. you can help me out.
Let's see the lucky winner.
Okay, Virginia. So we'll send you your tickets. They no longer give us physical tickets, so it's all electronic. We'll send you an email with that. Yeah, of course.
Say it's too late, I'm not gonna show
Oh.
up.
Awesome. If anyone wants to stick around for a member orientation, we'll make it super brief. Unfortunately, we can't connect to the projector, but those of you online, if you wish to stick around for that, feel free to just give us a few moments here to get ready. But otherwise, thank you so much, Lisa.
I enjoyed it. Appreciate it. Mhm. Sure. Oh,
I think they're using Maricopa. Yeah. I think the TV in the night we can plug in.
Do you guys mind moving over to our co-working space? Because I know we have the orientation, right? You guys would like to use
How many
this screen?
people in the orientation?
Can you ask them how many would like to stay or like a personal call?
No. Okay.